what is FCFF and what is FCFE. First of all, FCFF means free cash flow for the firm. FCFE would mean free cash flow for equity. FCFF, FCFE, free cash flow for equity. Now, what does it mean? Remember, friends, as we discussed in the beginning, what is value? Value is utility. What is valuation? Valuation is to quantify that utility. So if I own a business, what is the utility for me of that business? Utility of that business for me is the cash which this business is going to generate over its life. And that is the utility of this business for me. When we do the valuation of a business, please remember how the businesses are brought into existence all over the world. All over the world, businesses are brought into existence on the strength of money put in by shareholders and put in by lenders. All over the world, businesses are brought into existence on the strength of money which is contributed by shareholders as capital and loans which are given by the lenders as capital. So when we want to do the valuation of a business, we can do the valuation of a business in two ways. Number one, we can find out the enterprise value. That means we can find out the value of the entire business. And that means that is the value which is for the shareholders and also for the lenders. We can also find out the value of a business only from the perspective of shareholders. So depending on what is our purpose, if we want to find out value of a business as an enterprise, then what we will do, we will need to calculate FCFF, free cash flow for firm. And what is the meaning of free cash flow for firm? Meaning of free cash flow for firm is cash which is generated from the business and which is available for all the stakeholders, including the lenders. So that means what? That means profit after tax, and depreciation and amortization and interest. Total of all these four figures will be known as free cash flow for the firm. That means from this business, this is the amount of cash which is available for the benefit of all the stakeholders, every stakeholders of the enterprise. So that is FCFF. Then if we want to find out value of a business from the shareholders' point of view, that time we will calculate FCFE, free cash flow for equity. What does it mean? It means the cash which is available only for the benefit of equity shareholders. Only for the benefit of equity shareholders. That means what? That means, please pay attention, profit after tax plus depreciation plus amortization. Total of these three components will be cash flow for equity. I am sure you can understand. When we calculated cash flow for the firm, we took profit after tax, we took depreciation, we took amortization, and we also took the interest into this for calculating FCFF. For calculating FCFE, we removed the interest. And why we removed the interest? Because interest amount is paid to the lenders. Interest amount is not available for the benefit of the shareholders. What is available for the benefit of the shareholders is your profit after tax and depreciation and amortization. Only this amount is available for the benefit of equity holders. So this is the difference between FCFF and FCFE. And please remember, other than the explanation that I have given you for FCFF and FCFE, some more adjustment will need to be made in these figure, and those adjustments will be for the capital expenditure, for the increase in borrowings, for the working capital. So those adjustments also will need to be made to these figures, and so as to arrive. So the sum and substance of FCFF and FCFE: number one, FCFF is cash available for all the stakeholders including the lenders. FCFE is cash available only for the equity holders, only for the benefit of shareholders. So this is the difference between the FCFF and FCFE. I hope I have explained this question to your satisfaction.